For millions of Americans, retirement is supposed to be a time of relief. No alarm clocks, no rush hour traffic, no deadlines. But for many seniors, one bill keeps showing up every year and it keeps getting bigger. Property taxes. You might have already paid off your mortgage. You might be living on Social Security or a fixed pension. Yet somehow, the cost of simply staying in your own home keeps rising. And here's the part most people don't realize. Across the United States, there are legal property tax relief programs specifically designed for seniors, programs that can reduce your tax bill, freeze it, or even eliminate large portions of it entirely. The problem isn't that these programs don't exist. The problem is that most seniors are never told about them. In today's video, we're breaking down exactly how homeowners over 60 can save thousands of dollars on property taxes, and we'll walk through 10 specific places where these benefits are strongest. If you live in one of these states, or you're thinking about moving after retirement, this information could make a life-changing difference. Let's start with something important. Why seniors are paying too much in property taxes. Property taxes don't care if you're retired. They don't adjust automatically when your income drops. They don't slow down when home values skyrocket. They just keep climbing. In many areas, home prices doubled over the last decade, which pushed assessments higher, even though many seniors are earning less than they did while working. This mismatch is exactly why states and counties created senior relief programs in the first place. These programs usually fall into four main categories. Exemptions. Removing part of your home's value from taxation fall. Freezes. Locking your tax bill at a fixed amount date. Credits or rebates. Getting money back after you pay. Deferrals. Delaying taxes until the home is sold. But every state handles this differently. Age requirements vary. Income limits apply. Applications are often required, and missing a deadline can cost you thousands. Now let's get into the first place where seniors can see massive savings. 1. Florida. One of the most senior-friendly tax states. Florida has long been considered a retirement destination, and property taxes are one reason why. The foundation of Florida's system is the homestead exemption. If you own and live in your primary residence, you automatically qualify to remove a portion of your home's assessed value from taxation. But for seniors, Florida goes further. Homeowners aged 65 and older may qualify for additional exemptions, depending on county rules and income levels. Some counties offer extra value reductions, local tax waivers, school tax exemptions for qualifying seniors. Florida also limits how much a home's assessed value can increase each year under the Save Our Homes cap. That means, even if the market explodes, your taxable value rises slowly. For retirees living on fixed income, this protection alone can mean thousands saved over time. Key takeaway: Florida rewards long-term senior homeowners and makes it easier to predict future tax costs. 2. Texas. Property tax freezes for seniors 65 plus. Texas doesn't have a state income tax, but property taxes are high. That's why the senior tax freeze here is so powerful. Once a homeowner turns 65, Texas allows them to freeze the school district portion of their property tax bill. That means, even if home values increase, even if tax rates change, your school taxes stop rising, and that freeze stays in place for as long as you live in the home. Texas also provides a general homestead exemption, and many local jurisdictions add their own senior-specific benefits. For married couples, if one spouse qualifies by age, the household may still benefit. This is especially important in fast-growing cities where taxes would otherwise skyrocket. Key takeaway: Texas doesn't lower taxes for seniors, it stops them from rising, which can be even more valuable. 3. California. Powerful protection. Through Proposition 13. California property prices are high, but the tax system works very differently. Thanks to Proposition 13, property tax rates are capped, and assessed values can only increase by a small percentage each year. That means if you bought your home years ago, your tax bill may be dramatically lower than your neighbors who bought recently. For seniors, California also offers property tax deferral programs that allow qualifying homeowners to delay payments until the home is sold. Additionally, recent changes allow some seniors to transfer their tax base when moving to a new home, even in a different county. This means retirees can downsize or relocate without losing their low tax rate. Key takeaway: California protects long-term senior homeowners better than almost any state. 4. New York. STAR program and senior exemptions. New York has some of the highest property taxes in the country, but it also offers significant senior relief. The STAR program reduces school taxes for eligible homeowners, and seniors with lower incomes qualify for an enhanced version. On top of that, many counties offer a senior citizen homeowners exemption, which reduces the assessed value of the home based on income. In some cases, this exemption can remove up to 50% of a home's value from taxation. Income thresholds matter here, so retirees living on Social Security often qualify. Key takeaway: New York is expensive, but senior exemptions can dramatically soften the impact. 5. Pennsylvania. Rebates that put cash back in seniors' pockets. Pennsylvania takes a different approach. Instead of only lowering bills up front, It offers property tax and rent rebates for seniors and disabled homeowners. Eligible residents aged 65 and older can receive annual rebates based on income. These rebates apply not only to property taxes, but also to rent, which makes the program unique. Some seniors receive hundreds of dollars back each year, while others qualify for much more. Local tax relief programs may stack on top of this benefit. Key takeaway: Pennsylvania helps seniors after payment, making housing more affordable year over year. 6. Illinois. The senior freeze that few people understand. Illinois offers one of the most powerful, yet misunderstood, property tax programs in the nation. It's called the Senior Citizens Assessment Freeze Homestead Exemption. Once a homeowner reaches 65 years of age and meets income requirements, the assessed value of their home stops increasing. That means when property values rise, your tax assessment doesn't follow. You still pay taxes, but they're based on an older, lower valuation. For long-term residents, this freeze can prevent thousands of dollars in increases over time. Illinois also provides a general senior exemption, additional reductions for households with limited income, local relief programs layered on top of there. The biggest problem? Many seniors qualify but never apply. And without an application, nothing happens. Key takeaway: Illinois protects seniors who act, but silence costs money. 7. New Jersey. The Senior Freeze Reimbursement Program. New Jersey's property taxes are among the highest in America. That's exactly why the state created its Senior Freeze Property Tax Reimbursement Program. This program doesn't lower your tax bill up front. Instead, it refunds the difference between your current tax bill and what you paid in a previous base year. In simple terms, if your taxes go up after you qualify, the state pays the increase back to you. To qualify, homeowners must be 65 or older, live in the home as a primary residence, stay within income limits, maintain continuous eligibility. Over time, this reimbursement can add up to thousands of dollars. For retirees living on predictable income, it creates stability in an otherwise expensive state. Key takeaway: New Jersey doesn't stop tax growth, it pays seniors back for it. 8. Michigan. Property tax credits that adjust to income. Michigan focuses on affordability rather than flat exemptions. The state offers a homestead property tax credit that scales based on income, home value, and tax burden. Seniors with lower income receive larger credits. This credit can be claimed even if you don't owe income tax, which makes it especially helpful for retirees. For homeowners over 65, Michigan also offers additional protections, including valuation caps, credits for veterans and disabled seniors, local relief programs through counties of start. What makes Michigan unique is flexibility. Even modest-income retirees can qualify, and renters may also benefit. Key takeaway: Michigan targets fairness, not just age. 9. Arizona. Valuation freezes and senior protections. Arizona gives seniors a powerful tool: control over assessed value. Homeowners aged 65 and older may qualify for programs that limit how their property is valued for tax purposes. Instead of using current market prices, counties may lock assessments at reduced levels. Arizona also offers property tax deferrals, income-based exemptions. 1. Reductions for disabled seniors. In fast-growing areas where prices rise quickly, this protection matters. Without it, retirees would see sharp increases year after year. Key takeaway: Arizona shields seniors from market volatility. 10. South Carolina. Major exemptions on primary residences. South Carolina provides one of the most straightforward benefits for older homeowners. Residents aged 65 or older are eligible for a full exemption from school operating taxes on their primary residence. School taxes make up a large portion of property tax bills. Removing them can save thousands annually. There's no income requirement for this exemption. Once approved, the savings continue year after year. Additional benefits may include value caps, disability-related exemptions, has 1I1, local relief initiatives. Key takeaway: South Carolina removes one of the largest tax components entirely. What most seniors never hear about these programs. Here's the uncomfortable truth: governments rarely notify homeowners when they qualify for relief. There's no automatic enrollment, no reminder letter, no warning when deadlines pass. In many cases, you must apply. You must reapply Britannia. You must prove eligibility. Missing paperwork can erase benefits for years. That's why many seniors continue paying full taxes without realizing what they're entitled to. Exemption versus freeze versus deferral. Know the difference. Understanding these terms is critical. Exemptions reduce the taxable value of your home. Freezes stop assessments or tax amounts from increasing. Deferrals delay payment until the home is sold or transferred. Credits return money after payment. Each serves a different purpose. Some protect against rising values. Others help during low-income years. Some are better for long-term homeowners. Others work best after relocation. There's no one-size-fits-all solution. Why income limits matter more than home value. Many seniors assume their home is too valuable to qualify, but eligibility usually depends on income, not property price. Social Security, pensions, and retirement withdrawals often fall under qualifying thresholds. Even seniors who appear wealthy on paper may still meet requirements. Never assume, always check. The one step every senior should take today. If you remember only one thing from this video, let it be this. Contact your local county assessor or tax office. Ask specifically, what senior exemptions exist? What age do they start? What income limits apply? What paperwork is required? This single phone call can unlock benefits you didn't know existed. Staying in your home shouldn't be a luxury. You worked for decades. You paid into the system. You built your home. Property taxes should not force seniors out of the places they raised families and built memories. These programs exist because lawmakers recognize that reality. The only tragedy is how many people never use them. If you're over 60 or approaching it, this information isn't optional. It's protection. If this video helped you, share it with someone who might be struggling with property taxes. And remember, saving money legally isn't gaming the system. It's using the system that was built for you.